Hi, this is Devins Financial Weekly Stock Analysis Newsletter. Today is October 16, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Current market trend and our strategy. US stock market uptrend is under pressure. I have reduced the long positions in the stocks and the ETFs. Some of the stocks get stopped out. So I hold part of the position. It's less than 50%. In a long position. Let's take a look at the indices. German DAX index continues to struggle around the 50-day moving average. And NASDAQ, we had some distribution days, means high volume, and market came down and broke 50-day moving average. So that put the market uptrend to be under pressure. So as long as NASDAQ continues to stay below 50-day moving average, we are not very good. So we should be very cautious in this market condition. S&P 500 had been under 50-day moving average for a while. So this is weaker than NASDAQ. And gold is in a downtrend right now. It tried to support around 200-day moving average. Silver did the same, downtrend. You have this lower peak and the lower bottom here. So silver is also trying to support a 200-day moving average. So is gold mining stock ETF below 50-day moving average, and 50-day moving average is moving down. And so this is a downtrend. Also try to pause. In the middle of the downtrend, GDX is making a pause around 200-day moving average. It doesn't mean this is gonna rebound. It may rebound a little bit, but the overall trend is just going down. Crude oil seems to be in the uptrend right now. Crude oil ETF is the same as a crude oil. XLE is an energy stock ETF, and this is actually performed better than a lot of the ETFs. And it's still in the trading range. China Asia market climb above 50-day moving average. So it looks like a China market is going this slowly climbing up kind of thing. So it could be to the uptrend now, but the trend is kind of weak. So you can see it's still China market is still in the trading range, or it's a very slow uptrend. FXI is a China ETF, and this has broke 50-day moving average, and right now it's below 50-day moving average. That's not a good sign. We should watch this. This usually lead the China Asia. So if this one, FXI, continue go down, then Asia can, that can mean Asia can turn down, because FXI seems to be, those are the big companies from China, so they're leading the market usually. IBB is the US biotech ETF, and this is in a downtrend. US real estate ETF, IYR, this is in a downtrend. US airline ETF, trading range. Semiconductor ETF, this is one of the strongest ETFs in this market. Right now, semiconductor ETF may find support at around 50-day moving average. So that might be a buy opportunity, but bear in mind, if you were to buy this rebound from 50-day moving average, you should use this low of this day, $66, to be the stop order. So if the rebound fell, it will fall below $66, then we should get out if we were to buy this rebound. You don't have to buy this rebound, but that's what I mean. If you were to buy it, use that low as a stop. Social media ETF, again, this is one of the strongest ETF, but now this ETF is below 50-day moving average. Thursday looks like it had a rebound, but Friday it closed below 50-day moving average. That's not good. We should wait for the next move. If a next move, it can go above 50-day moving average, then we can buy. But again, if you were to buy this rebound, use this low, $23.84, as the stop order to stop order trigger price. So if we were fall below that price, you should get out. Solar ETF downtrend. XLF is a financial ETF. This ETF is kind of weak right now. It doesn't go anywhere. It's just bouncing around 50-day moving average. A utility ETF XLU, this one is going to the downtrend. So those are the indices and the ETF. We have a stock watch list. There are stocks that's building a base but haven't broke out yet. There are stocks already broke out but within the buy range. So-called buy range is a 5% above the breakout pivotal point. If the stock price is within 5% above the pivotal point, then it's in the buy range. If it's more than 5% above the breakout pivotal point, then it's too extended. So we also have stocks in too extended. There's no buy opportunity right now. And then we have a list of stocks that's being removed from the watch list. Those are the stocks broke down broke down from the major moving average. Usually it's a 50-day moving average with a very high volume that indicate institutions are selling those stocks. So we took them off of a watch list. Let's just take a look at those lists. The first list is the breakout setup. That's what they call it. This stocks has not break out yet, and they are in the buy range. Well, actually, let me take it back. This ATVI, this one already broke out. I'm sorry, this one should be already broken out here from this base, $43.15. And right now, it's another opportunity present itself, a rebound from 50-day moving average. So that's a buy opportunity here. If you were to buy here, use this low to $42.51, a little bit below that low, that should be the stop order. ELLI, and these stocks also broke out at here, but after it broke out, it quickly fall back. Now it's trying to find support at 50-day moving average. GKOS, this also broke out here, but this breakout just didn't go anywhere. Also fall back and try to find 50-day moving average as the support. So all these three stocks, it's breakout seem to not being very successful. It just try to come down and find support at 50-day moving average again. So it could be a buy point. It's up to you. If you were to buy, definitely use this low as the stop order. So in case that rebound from 50-day moving average fail, and you should get out. Tata Motto, this is still a rebound from 50-day moving average, and this is a buy point. 50-day moving average has been supported many times. So if you assume it's going to successfully find support at 50-day moving average again, then you can buy here, but use this 50-day moving average as the stop order. So all these stocks, all these are like a buy point finding support at 50-day moving average. So now let's take a look at another second list. Those stocks has a successful breakout, and now it's still within the buy range. $124.72. So the buy point will be 10 cents above here, $124.82. And now it's still above that buy point. So this is slowly going up. So right now, that's within the buy range. Domino Pizza, DPZ. This stock also had a rebound from 50-day moving average. So this stock has a very nice uptrend. Now it pulled back, rebound from 50-day moving average, and it's buyable here. But if you were to buy, again, use the 50-day moving average as the support, as a stop trigger price. Just in case the rebound is not successful, then you get out. Edward Life Science, this one is actually break down 50-day moving average. This is not very good. The volume is high, stock closed below 50-day moving average. That's a bad sign. So this stock is actually a danger. It has to be very cautious. If you're holding this stock, I would use the low of the Friday as a stop order if you haven't get out yet. But if you don't have this stock, then just continue to watch it. There's no action to be taken unless the stock finds support around 50-day moving average. Facebook. Facebook right now is trying to support a 50-day moving average, but the volume is not very good. It's good that on Thursday it closed above the upper range of the trading range on Thursday. And Friday is a small volume, very small volume. So it's unclear right now whether the stock finds support or not around the 50-day moving average. So we can continue watch it and see what's going to behave. Google is trying to support around 50-day moving average. And GrabHub also finds support around 50-day moving average. Thursday is a very good sign. Stock closed on the upper side of the trading range. Volume is high, so that's a good sign. NVIDIA also finds support on 50-day moving average. So Thursday is a very good sign. NVIDIA is a very strong stock. It's in a very strong uptrend. And this is buyable. But again, if you were to buy at this price, use $23.70, which is a low of Thursday, as your stop. NVIDIA, this is a closer look of the NVIDIA daily chart. You can see this is a 50-day moving average, which is a yellow line. It's been serving as a support for this stock. So NVIDIA is buyable now, but using $63.70 as your stop order trigger price. In case this rebound were to fail, in case this rebound is not successful and stock fall below this, then you get out. But if it doesn't fall below it, continue go up, you just continue hold on to it. PXD, this is a new stock, Pioneer Nature Resource. This is an oil company stock, and this stock broke out. This stock broke out at $191 right here, but as soon as it break out, it pull back. So that's the market. All the breakout doesn't seem to hold. The breakout will trigger immediately sell off. So the stock actually came down. And a lot of stocks are in the 50-day moving average support area. So I would think it's safer to buy a very strong uptrend stock such as NVIDIA, which finds support around 50-day moving average, instead of buy the breakout like this one. So it will be safer to buy the stocks that's rebound from 50-day moving average. So now the third list of the stock that's too extended, Amazon. This is a stock's very extended, very nice uptrend. If Amazon to pull back to 50-day moving average, that assuming the market condition is not too bad, so that may present a buy opportunity. Alibaba tried to find support at 50-day moving average, but Friday it just closed down. So I will continue to watch this stock, see if it can actually find support at 50-day moving average. It's just because it has been a very sharp uptrend, so it invites a lot of sellers now because of the profit taking. So we should continue watch this stock, see if it can find support around $100. If Alibaba finds support around $100, that is a buy opportunity. If it's not, then it can be very risky to buy. NetEase is still in the uptrend, but no buy point. Weibo is the same uptrend. I don't see any buy point at this point, so you just continue to watch them. Fourth list are the stocks that's been taken off the watch list because they broke down. Like ACIA broke down 50-day moving average with a huge volume. That's institution selling. When the stock happened like this, it just get out. AMAT, Applied Materials, also broke down 50-day moving average with a high volume. Again, a sell signal. GoPro did the same, broke down 50-day moving average. Actually, GoPro, if you were to trade this stock, It's very volatile, and you should use like a 10 or 20-day moving average as a stop trigger, or the trading range here, $15.85. That should be the stop trigger. So you should already got out now. IPHI broke 50-day moving average with a high volume. Bad thing. Line, this is a Japanese stock. This one hasn't broke 50-day moving average yet, but from a trading point of view, when the stock gone up this much and the peak came down, this day actually should be a sell signal. This is a reversal day. So this stock for now, well, I can continue watch this, but it just, I don't see any point to buy this stock until it build a base again. Silicon Motion Technology broke 50-day moving average. Not a good stock. So those are the stocks get removed from the watch list. What to do in the current market? And when market uptrend is under pressure, we should reduce long positions. And for the rest of the long positions, we should have a stop orders. And we only buy stocks. We can buy stocks here if there's a very good opportunity to buy, but we have to be very cautious. Only buy the strongest stocks with a good buy point, such as rebound from 50-day moving average. And the position size has to be controlled, and you can't buy too much because the risk is very high right now. Okay, that would be all for today. If you would subscribe to my YouTube channel, I would really appreciate it. That will help me keep track of the viewers, and feel free to leave the feedback. Thank you very much. See you next week.